A very warm welcome to this video presentation on Syrma SGS Technology IPO. It has been about 3 months since the last mainline IPO hit the market. This has been due to considerable turmoil in the market and uncertainties in the world. Ether Industries was the last IPO that came out in May 22. Syrma SGS Technology is a Chennai-based company and is into electronic product design, manufacturing services, and it couples research and development with manufacturing. Syrma SGS Technology IPO opens on 12th August, and due to some intervening holidays, the issue closes on 18th August. It's more of a fresh issue of 766 crores, and there's a small OFS portion. The total issue size is 840 crores. Bid lot is 68 shares and multiples thereof. The price band at the upper end is rupees 220. About 2 lakh applications are required for retail for one-time subscription to the issue. Syrma SGS Technology specializes in high-mix, flexible volume, precision global OEM electronics manufacturing services and developing RFID technology. Syrma is positioned as an EMS partner with excellent manufacturing capability, wide product expertise, and has a global presence in many countries. It caters to high-growth industries, follows a B2B model, and these industries include automotive, industrial, consumer, IT segments, healthcare, etc. More on Syrma SGS Technology. It basically provides services and solutions to OEMs. It has no plans to make its own products. So it develops these products for these OEMs many times from the very initial product conceptual stage to testing, validation, and subsequently volume production as per the orders received from these OEMs. Syrma's product portfolio includes printed circuit boards, PCBs, RFID, radio frequency identification products, electromagnetic and electromechanical parts, memory products like USB drives and motherboards. Not everything, but some parts of these. New areas which it intends to pursue include designing electromagnetic components for aerospace, miniature electronics for wearables like watches, etc. The company had made some acquisitions, which we'll see later in the presentation, due to which now it operates about 11 manufacturing plants in the Himachal Pradesh, Haryana, Uttar Pradesh, Tamil Nadu, and Karnataka, with 3 R&D facilities in India and 1 in Germany. Its customers include mark clients like TVS Motor Electronics, Smith India Watch Products, Robert Bosch Engineering, Eureka Forbes, Hindustan Unilever, etc. Syrma got a very good response for the anchor investor portion. It is not normal for companies to get good response from both mutual funds and foreign institutional investors. Syrma got good response from both these categories. 7 domestic mutual fund schemes across 5 AMCs participated in the anchor book, and they were allotted about 1/3 of the anchor allocation. Some select investors in the anchor list include Nomura, ICICI Prudential, Colorado, ICICI Prudential Flexi Cap Fund, Franklin India Fund, Tata India, Malabar Select Fund, which has been participating after having already participated in the pre-IPO book. Same applies to IFL Special Opportunities Fund, which also participated in pre-IPO round and is now participating in the anchor investor portion as well. Sunil Singhania controlled Abacus Emerging Opportunities Fund, IDFC Fund, Kuber India Fund. So the list looks quite impressive. A look at the financials of the company shows that the company has consistently improved its revenue. However, its profits have lagged behind. If we see the FY22 pro forma combined results, which is due to acquisition of two large entities, including SGS Telelink. There has been a good jump in revenue on account of this uh, acquisition. It also looks that these acquisitions are profitable as they have contributed a good amount to the profitability, and profit after tax now stands at 76 crores on a combined basis. The company at the upper end of 220 rupees IPO price is being offered at a PE of about rupees 51, which is not cheap, but then we have to look how its peers are being valued by the market. Market cap is about 3,900 crores and market cap to sales ratio is 4.5. This offer, as already discussed, is basically or largely a issue of fresh equity shares. The company raised 110 crores in May 22 via pre-IPO placement, which was at a higher price of rupees 290. Malabar and IFL funds participated in this pre-IPO round. The IPO now is priced at rupees 220, which is at a good discount to the pre-IPO placement. The reasons for this could be many, like change in global environment. From the fresh issue proceeds, a large chunk of 403 crores will be used to fund the capital expenditure and 131 crores will be used for funding the working capital. So this bodes well for the company. Company's plants are operating at 75 to 85% utilization along various verticals. 45% revenue of Syrma comes from exports. In fact, if we see Syrma on a standalone basis, before it took over SGS, Syrma had about three-fourths of its turnover from exports. SGS is basically an India-focused company, and together now 45% revenue of the Syrma is coming from exports. The company operates in B2B space only. It doesn't supply any item to customers. Deals only with large OEMs. The company has 16 customers which have been there with it for 10 years, and the company has been getting repeat orders from these customers. Syrma has made large acquisitions which include Toivo Automation in December 2014, merger of 3G Communications Private in April 16, and the most recent and a big acquisition has been of SGS Techniques in September 21 and Perfect ID in October 21. Initially, Syrma acquired a 20% stake in SGS, and the stated goal was to merge SGS with Syrma in a share swap. However, this plan was later shelved off, and Syrma acquired 100% stake in SGS. SGS was promoted by 4 technocrats, and each of these technocrats was given 9.23% share of the equity capital in Syrma, and together they now hold 37% of the share capital of Syrma. SGS, incorporated in 1986, now acquired by Syrma, is an Indian EMS company that primarily assembles PCB for its clients. The company was headquartered at Gurgaon, and with this, Syrma has got access to some new geographies. So, in terms of customers and geographical profile, there is no overlap between Syrma and SGS. Syrma focused on export market, SGS on local market, and also different geographies. And so, both of them will go together, and the effect will be additive. Syrma also acquired a 75% stake in Perfect ID India Private Limited in October 21. This is to enhance its range of RFID devices. Some concerns. The present government policy is very much favorable for electronic manufacturing sector. This has been acknowledged by management of Syrma as well. In fact, in their own words, the government policy and desire to promote the electronics industry has never been so strong. So any change in this policy and regulation, which comes under different government policy initiatives like PLI, Atmanirbhar Bharat, Make in India, they could uh, they could have a material impact on Syrma. There can be a delay in expanding capacity. This is not due to lack of funds, but the products for which Syrma is setting up capacities are highly technical oriented, and there can be some technical challenges when setting up the production lines for this uh, component or for this product. Syrma being an export market and also importing considerable raw material from outside faces unfavorable forex could face unfavorable forex movement. The operations of Syrma are capital intensive because Syrma does not have any fixed contract or permanent orders from suppliers, and rather it develops the product from them, and as and when the customer needs this item, monthly basis or on batch basis, they release the orders on Syrma and Syrma supplies against these orders. To meet these, it has to keep considerable amount of inventory with it, and this locks a lot of working capital. Company could also face competition from others. If we compare Syrma with the peers, the listed peers which Syrma has mentioned in its RHP are Dixon Technologies and Ember Enterprises. Both of these are highly fancied on the market. Dixon is about 8 to 9 times revenue of Syrma, and Ember is about 3 to 3.5 times revenue of Syrma. If we see the net profit margin, Syrma enjoys better profit margin. Dixon focuses largely on LED TV space, making it for many brands, and Ember on air conditioner space. Of course, they have other lines also, and Dixon is a good company, but their margins are low. Syrma focuses on a diverse range of customers and develops the product for their needs. So it's a low volume but high margin product in which Syrma operates. The PE for Dixon is quite high at 105. It's a very fancy firm. Ember is about 55 right now, and Syrma is being offered at a PE of 51 on the expanded IPO capital, which looks not very very highly priced. Overall assessment: the Indian electronic manufacturing services sector is expected to grow at 25 to 30% CAGR basis. With planned additional capacity, Syrma is well placed as it is undertaking a 570 crore capex over the 2 years, which is even more than the investment which it has done till now in its plant. Company has a wide product basket. It has good engineering and design capability, a diverse customer base across various geographies, export as well as import, backed by a better product mix, strong R&D capability. The company has long-standing relationships with customers with many repeat orders. Now, and the company is now adding capacities in what it says is to capitalize on domestic and global opportunities that have emerged due to China plus one factor, plus certain things in Europe, etc., and the stress of the government on promoting electronics in the country. The company has one of its manufacturing facilities in SGS in Tamil Nadu, which gives it some tax incentives as well as. Syrma is the first in India to manufacture radio frequency products. If we look over the last 3 years, the company has been able to grow its revenues by 21% CAGR basis. This has been largely aided in the last year by inorganic acquisition of two companies. Profitability on a standalone basis has shown a declining trend. Business from industrial, consumer and automotive sector has been growing nicely, but business from healthcare has declined in the last 3 years. Syrma Technology, due to the recent acquisitions, may almost double their capacity as these acquisitions blend with companies' existing business and they reap the benefit of customers from either side. Issue seems to be fully priced and it may fall as a moderately risky bet on the fast-growing electronic sector in the country. The company's promoters are quite experienced in this field. In fact, Tandon Electronics set up a floppy diskette unit in 1976 in Chennai and also a hard disk drive unit for IBM. Later on, due to IBM exit and um, and also due to certain changes in US market, where Tandon Corporation used to supply hard disk to IBM, fast changes in technology, advent of PCs, etc. Tandem Corporation sold its hard disk unit to Western Digital. But the company has a very long-standing experience in this field, and a new generation is there now to steer the company ahead. So, though the issue appears to be fully priced, I would like to keep the following in mind that there is a substantial expansion underway in the company, and it has got a high growth potential in the electronics manufacturing sector. There is a cross-sell opportunity due to acquisitions made by the company, and these acquisitions seems to be accretive to its profits. Likely incentives under PLI scheme for white goods and telecom products, for which Syrma has been selected, also should help the company. To apply or not, I have given the basic information, so individuals should make informed decision based on their own assessment and information gathered from other sources. However, for educational purposes, I'm summarizing my views here. I perceive a moderate to low risk in this IPO, a low to moderate profit. It can be a bit of loss also if the market conditions go bad. Listing gains are possible. Current GMP is about 30 and it has been showing some increasing trend from rupees 15. Company and the sector looks good, but matching and good performance is needed from the company to make it a long-term hold. I expect a good subscription to this IPO. I'm likely to apply in this IPO, but to be watching it closely from a cautious angle, the response on day 2 and 3. But my chances of applying in this are quite high. These are my views only. Please do your own diligence on this issue and apply as per your own judgment. Thank you. Please read this disclaimer carefully.